We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up NZD, USD. We are on the 12-month time frame. Price action, last candle to the right hand side is a bearish red candle. Spike down to that low, some area of support. We do have price action overall, higher highs, price action overall, lower lows. Midpoint, also adding second level lows, third level lows, and fourth level lows. Current price is sitting at 0.63450. So if price work its way up, it can tag that resistance line in white at 0.65560. If the market pushes up further, it can tag the next resistance line at 0.78286. And before tagging that area, it can tag the midpoint at 0.71514. If price action drops down, it can tag the support line at 0.51678. And before tagging that area, it can tag the midpoint at 0.58630. So let's zoom out to see what's going on in the market. So if this market pushes up from the current price action, let's see why. So starting off from the beginning, market spiked up to a high, came all the way down to support. Then we see the pattern of that first, second, third, fourth. So we have a double bottom, and then market came to retest that double bottom with a first, second, third, and we're looking for the engulfment to see if it's going to push up towards the price action towards the second, third, last candle of the market, and we'll see that formation of that W to that resistance line, looking for the break, the retest for that market to push up. So the market is currently located at second level lows, coming from the double bottom and sitting on the double retest to that right hand side. If price action pushes down from this area, is identified multiple pushes to that top. The market did break the midpoint, came back to retest. So that area identified as the first, second, third, fourth. So we have a double top, first, second, third, and we're going to see that market pushed down. So market's coming from a double top and a double retest overall. 1, 2, 3, 4 pushes to that top. So it's a quadruple top in that area. Or we can receive that consolidation with the current price, second, third, fourth, fifth, sixth, seventh, and half of the bottom of the eighth of last candle in the market. Working our way to the 6-month time frame. So price action on the 6-month time frame is reading as a bullish green doji cross, spike down to that low. So if the market pushes up from this area, it's coming from the spike downs, which are identified as a first, second, third. We're looking for a bullish green candle to push back up and break through that area. And if the market pushes down from this area, it's coming from multiple pushes to that top of that resistance. So we can see that first, second, third, fourth retest, market push down. So we have a triple top and market sitting on the area of a double top. So the double top is retesting a triple top. And we're going to see if that market breaks, retest, then push down further. Working our way to the 3-month time frame. Price action on the 3-month time frame reading as a bullish green candle. So this market is respected for the support. We can see that market push up for that first, second, third, get the engulfment towards the second last candle as we do. But now we got to figure out what's going on, and we're going to see that market pushes up for that W formation. So paying attention to that area. And before I start on that, if that market pushes down from this area, market identified as multiple pushes to that top. So the market broke, returned. So we have that first, second, third, fourth. So we have the break of that market with the second last candle, third last candle, break of the market, second last candle was a push. Price action came back to retest. We're going to see if it's going to push down with another bearish red candle, and that will still be the price second. And if a candle forms after price action, it'll still be consolidation to that engulfment to the second last candle, top side or bottom side. So let's take a look at what's going on in that area. So if this market pushes up, we can see that we did receive the break and retest. We're going to see that market's going to push and break out. It can, and the reason why is because we do have price action body is above the previous body, and price action wick is above the previous wick, showing that it's dominant for that market to push up further. But it just ran into some issues, which would be ran into that resistance line. So as we walk down the time frame, we're going to see what's going on in that area. That market, we do know, is in that area of a zone. Okay, it's near the bottom of the resistance, but it's in the area of a zone, so it could be consolidating a pattern within that area for that market to finally push up and break out. And we'll identify that as we walk down the time frame. Headed down to the monthly. Price action on the monthly identified as a bullish green candle. Spike up to the high, doji style, so it's still indecisive, lost a lot of momentum to that resistance, still identifying an overall break and retest. Second, third, fourth, fifth last candle retest as well. So we got a break, a retest, market pushed down further, came back to retest again. So if this market pushes up, we'll identify that pattern as the first, second, third. We're looking for that market to push and break out the resistance. So we're looking for a break and retest on a lower time frame for that market to push up and to close out that formation of that W. Working our way to the weekly. Price action on the weekly is identified as a bullish green candle. So what this market is reading is markets, let's say markets coming from a low, which would be like some type of double bottom, first, second, third, fourth, pushed all the way up, spiked a high. So just to kind of make these areas for you, we have a resistance, we have a mid, we have a support. So the market did break from that W at that low. It did break the midpoint, tagged the resistance, lost momentum, came back to second level highs. And we're going to see that market's going to respect with the bullish green candle to engulf the second last candle to push that market up for that double bottom and a retest. If not, we'll see that market start breaking down through that second level highs to head down to that midpoint. Daily time frame. Price action, bullish green candle, market pushes up first, second, third, fourth. Price action retest. Is it going to push up further? Is it going to consolidate? Is it going to drop down? Headed down to the 4 hour. So on the 4 hour, we know that we are, let's see where we at. We know that we are near, got to pull back just a little bit. So we know that we are near a zone. We got to figure out what area of that zone. Took it back to the weekly, create another midpoint, and now we walk down the time frame. We can take a look at that zone on that 4 hour time frame. So we're going to go a little bit above the SR line, a little bit below. We can take a look at what's going on. So on the 4 hour time frame, the market identified it broke out the zone, came back to retest. We're going to see if that market is going to push up further. So far as we have a resistance, we have a mid, and the top of that zone is the low. So we can see that market identified as a pattern for that first, second, third, fourth retest. Market pushed up once, so it's a triple bottom, and we have another triple retest to retest that triple bottom. So market's trying to break out a second level lows to push up further. And walking down the time frame, we see that consolidation in the market. So from the 4, the 3, the 2, and so on. Okay, guys, this is Cam Jones, FX, NZD, USD.